Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine IAS 38, Intangible Assets. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. Intangible assets. Intangible assets are identifiable non-monetary assets without physical substance. Intangible assets are identifiable non-monetary assets without physical substance. Identifiable non-monetary assets without physical substance. For an asset to be identifiable in accordance with IAS 38, it must fall into one or two of these categories. Number one, it must be separable. It is separable. By separable, it means the asset can be bought or sold separately from the rest of the business. The asset can be bought or sold separately from the rest of the business. That is separable. The second one is it arises from legal or contractual right. It arises from legal or contractual rights. So that is, it must arise as part of purchasing an entire company. It must arise as part of the purchase of the entire company. Other conditions include it must also meet the definition of an asset. It must also meet the definition of an asset. Remember, assets are the resources controlled by an entity as a result of past events from which future economic benefits are expected to flow. The resources controlled by an entity as a result of past events from which future economic benefits are expected to flow. Examples of intangible assets include examples of intangible assets include, so we have licenses and quotas. Licenses and quotas. Licenses and quotas. 2. Intellectual property. Intellectual property. Intellectual property such as patents and copyright. Patents and copyright. Intellectual property such as patents and copyrights are examples of intangible assets. Then 3, we have brand names. Brand names. Then we also have trademarks. Trademarks. All these are examples of intangible assets. Classification or types of intangible assets. Intangible assets can be categorized into two. We have internally generated intangible assets. Internally generated intangible assets. The second one is purchased intangible assets. We have the internally generated intangible assets and purchased intangible assets. So we want to start with internally generated intangible assets. In accordance with IAS 38, intangible assets. Internally generated intangible assets cannot be capitalized, as their cost cannot be separated from the cost of running the business. Internally generated intangible assets cannot be capitalized. That means you cannot have them in the statement of financial position. The reason why they cannot be capitalized is because their cost cannot be separated from other costs of running the business. So the following internally generated intangible assets may never be recognized. Number one, we have inherent goodwill. This intangible asset cannot be recognized. We have inherent goodwill. The goodwill that arises when a business is being operated on a going concern. So it means this goodwill was not created from acquisition of the business. So inherent goodwill cannot be recognized in accordance with the provisions in IAS 38. Then we have brands. Then we also have the mastheads. Then we may also have publishing titles. Then finally may have customer list. This internally generated intangible asset cannot be recognized in the face of financial statement. So we want to examine the purchased intangible assets. When a business changes hand or when a business is acquired, the intangible asset that is created or that arises from the acquisition of the business is known as purchased intangible assets. Purchased intangible assets. So when a business is acquired, as I've said, or if a business changes hands, that is, the ownership is transferred to other parties or other people, the intangible asset that is created as a result of transfer of ownership of the business to others, that intangible asset is said to be the purchased intangible assets. Purchased intangible assets include license, patent, brand name. So we want to look at recognition of purchased intangible assets. Recognition of purchased intangible assets. Remember we said that internally generated intangible assets does not meet the recognition of an element and the recognition criteria in IAS 38, so that you should not recognize internally generated intangible assets. But the purchased intangible assets should be recognized in the face of the statement of financial position. So we want to look at the initial measurement or initial recognition. Initial measurement. That is, if you want to measure the intangible asset for the first time, how do you measure them? So, intangible assets should initially be measured at cost. It should be measured at cost. That is, the cost of that intangible asset is what you will have upon initial measurement of that intangible asset. Then we also have subsequent measurement or subsequent remeasurement. So at the reporting date, how are the intangible assets measured? That is what we mean by subsequent measurement. We mean the way the intangible assets are measured at the reporting date. The way you measure the intangible asset at the year end. That is what we mean by subsequent measurement. In accordance with IAS 38, intangible assets. So we have two models. Two models were prescribed in IAS 38. That means it can be measured in two ways. Number one, we have using the cost model. So subsequently, you can remeasure the intangible asset either by using the cost model or revaluation model. By cost model, it means you have the cost of intangible assets, the cost upon initial measurement, the amount you have when it was initially measured, that cost, you start with that, less accumulated depreciation or amortization, less accumulated depreciation or amortization. If you deduct this, or if you have any impairment, you deduct the accumulated impairment loss. That is the cost model. And the second method is revaluation model. Revaluation model. By revaluation model, it means you should carry the intangible asset at the revalued amount. The intangible asset should be carried at the revalued amount. That is revalued amount less accumulated depreciation. So you have the revalued amount, then less accumulated depreciation or amortization. So this will give you the carrying amount of the intangible assets as per the statement of financial position. I want to examine the format of schedule of intangible assets. So you have the intangible assets. You might have brand name, you might have development expenditure and other goodwill, etc. But let me just put intangible assets. Just the same way you used to have the schedule of property, plant and equipment in accordance with IAS 16. So you start with the opening balance, which is usually at the cost of the intangible asset upon initial recognition. In case you have addition to the existing one, that is the one just acquired during the year, you add it. So if there is disposal of intangible assets, the one sold during the year, you remove it. Then you arrive at the cost at the year end, balance at the year end. Then after this, you have the depreciation section or amortization. Depreciation or amortization. As usual, you start with the opening balance. Balance brought forward. That is opening balance. By opening balance, we mean the accumulated amortization at the end of the previous reporting period. At the end of the previous reporting period. The accumulated amortization, that is what you have as the opening balance here. Then you now have the amount charged in the year or charged during the year. The amount charged during the year is the one occurring during the year. So this amount is the amount that will appear in the statement of profit or loss as an expense. So you have this as an expense in the statement of profit or loss. Then you have disposal, the amortization pertaining to the intangible asset disposed, that will be subtracted. So you have the closing balance. So which is balance at the year end. Let me have this as B, then this as A. Then carrying amount at the beginning. Carrying amount at the beginning will be the balance you have in the cost section here, less the opening balance of depreciation, what you have here. That will give you the balance at the beginning. Then carrying amount at the end. At the year end. And that will be A, what you have here, minus B. So this is the format of schedule of intangible assets. Now let's take question as work example. Keep watching. Example: the following information were extracted from the non-current assets register of Olugbenga Nigeria Limited for the year ended March 31st, 2021. Amount in million naira. Internally generated development cost 1,595. Software licenses at cost 418. Goodwill at cost 4050. Accumulated amortization and impairment loss on 1st of April 2020. Amount in million. Development cost 775. Software licenses 204. Goodwill 540. During the year, the following acquisitions and disposals of assets were recorded. Acquisitions, we have development cost of 330, software licenses 91. Then we also have disposals, development cost 160, software licenses 12. Also during the year, goodwill acquired from business combination amounted to 102 million naira. The year-end impairment test on goodwill revealed a loss of 82 million naira. Annual amortization charge on the internally generated development costs and software licenses are based on their estimated useful life of 10 years and 15 years respectively. The accumulated amortizations on the disposal were 110 million naira and 40 million naira for development costs and software licenses respectively. Required: prepare a schedule for movement in intangibles to be disclosed in the note to the financial statements for the year ended March 31st, 2021. This question is obtained from ICAN November 2021 financial reporting. Solution to the question. The name of the entity is Olugbenga Nigeria Limited. Olugbenga Nigeria Limited. If you go back to the requirement, you have to prepare a schedule. So schedule of movement in intangible assets for the year ended. And the year end of the entity is March 31st, 2021. So you have 3. 1, 2, 3, 4. The intangible assets we have include development cost, cost. Then we also have software licenses. Then we equally have goodwill. Now let's have total. Amount in million naira. So naira M. So the starting point is you having the cost items, the opening balance brought forward. How much is the opening balance? No, the beginning of the year is 1st of April 2020. The opening balance amounted to 1595 for development cost. 1595, the opening balance of cost. Then that of software licenses, 418. Software licenses, 418. Then we equally have goodwill at cost, 4050. 4050. So you now sum them up. 1595 plus 418 plus 4050. That is total 6063. After the opening balance, do we have any addition? So we have accumulated amortization and impairment. These are amortization and impairment. During the year, the following acquisition and disposal of assets were recorded. So the acquisition, we have development cost 330. So we have that as an addition, the ones that were acquired during the year. Addition. So we have development cost acquired 330. Then we also have software licenses, 91 for software licenses. So let's sum them up. 330 plus 91, that is totaled 421. Then we also have disposals. So disposals include development cost 160. The one that is disposed will go out of it. So that is why you subtract that, jacket it. Software licenses 12. Software licenses 12. The total will be 172. It is when you are done with the cost that the impairment or amortization will be considered. Also during the year, Goodwill acquired from business combination amounted to 102. This is acquisition, which is still an addition to goodwill. So we have, it was acquired business during business combination. So we have business combinations based on IFRS 3. So since that is goodwill, you put it in the column of goodwill, and that amounted to 102. Or better still, you can put it in line with addition. So the year-end impairment test on goodwill, this is impairment. Annual amortization charge, these are information about amortization. So now let's sum up the cost in order to balance it, which is balance as 31st of March 2022. So we have 2021, the year end. So 1595 plus 330 plus minus 160. So we have 1765. 1765. Then we have 418 plus 91 minus 12. So we have 497. Then 4050 plus 102. That is totaled 4152. Then we have 6063. This is disposal. Disposal is minus. Plus 421 minus 172 plus 102. So we have 6414. So the next section is amortization and impairment loss. Amortization and impairment loss. The starting point is always the opening balance. Balance brought forward. The opening balance. The accumulated amortization for prior year, that should be your opening balance. We have accumulated amortization and impairment loss on 1st of April 2020. That of development cost 775. That is amortization. Opening balance 775. That is for development cost. Then we also have software licenses 204. Software licenses, the opening balance is 204. Then we also have goodwill. The opening balance is 540. 540. So let's sum them up. 775 plus 204 plus 540. Then we have 1519. Now, during the year, acquisition and disposal of assets were recorded. These are acquisition and disposal which was made during the year. Also, during the year, goodwill acquired from business combination amounted to 102 million. The year-end impairment test on goodwill revealed a loss of 82 million. The amount acquired has been recognized. So we have impairment loss of 82 million. So we want to recognize the impairment loss of 82 million. So let's have impairment loss. Impairment loss 82 million. That 82 million is on goodwill. 82 million. So we also put the same amount in total column. Then annual amortization charge on internally generated development costs and software licenses are based on the estimated useful life of 10 years and 15 years respectively. The one on internally generated development cost, the life is 10 years, and for software licenses, the life is 15 years. So now we don't have charge for the year. Charge in the year. So for development costs, the life of development cost is 10 years. Development cost, the life is 10 years, while the life of software licenses is 15 years. So the amortization that will be charged on development cost, we have 1765 divided by 10 years. That will give us 176.5, so which is approximately equal to 177. That is the amortization charge on development cost. Then after development cost, then we also have software licenses. The life of software licenses is 15 years and the cost is 497. So you have 497 divided by 15 years. So 497 divided by 15, that gives us 33, approximately 33 million. So how much is the total? 177 plus 33, that is total 210 million. Now back to the question. You have the accumulated amortization on the disposal were 110 million and 40 million for development costs and software licenses respectively. That means amortization on development costs is 110 million, while amortization on software licenses is 40 million. So we have, that is the one related to the one disposed, because you were told the accumulated amortization on disposal. So you have disposal. Development cost 110 million, while software licenses 40 million. The total will be 150 million. Now that every other adjustments have been incorporated, so now let's sum them up. $775 plus 177 minus 110, that is total 842. 842, that is balance. That is at 31st of March 2021. Then 204 plus 33 minus 40, that is total 197. 540 plus 82, that is total 622. Then 1519 plus 82 plus 210 minus 150. You have 1661. So you now have carrying amount. I've told you, you may have the carrying amount at the beginning of the period and carrying amount at the end of the period. The one as at 1st of April 2020, which is the beginning, and 31st of March 2021, which is the end. So the one at the beginning, your opening balance, which is 1595. The opening balance is 95. The opening balance here minus the opening balance here. So that will give us 1595 minus 775. That gives us 820. Then the carry amount at the end of the year, which is the closing balance here, 1765 minus the closing balance, 842. That gives us 923. Then for software licenses, the opening balance cost is 418 minus opening balance in respect of amortization 204. So that will give us 418 minus 204. That gives us 214. Then 497 minus 197. Then you have 300. Then the goodwill, the opening balance is 4050 minus 540. 4050 minus 540. That gives us 3510. Then the closing, 4152 minus 622. Then we have 3530. Then for the total column, you have 6063 minus 1519. That will give us 6063 minus 1519. So we have 4544. Then the closing balance, 6414 minus 1661. That gives us 4753. So this marks the end of the solution to the question. In my next video, I will examine how to deal with the research expenditure and development expenditure in IAS 38. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ZICA.